The world of cryptocurrency is abuzz with speculation. At the heart of this excitement lies a potential game-changer, a BlackRock XRP ETF. BlackRock, the world's largest asset manager, is known for its strategic moves in the financial market. Its entry into the XRP arena would send a powerful signal, potentially attracting billions in institutional investment. But BlackRock remains characteristically silent, leaving analysts and investors on the edge of their seats. Will they? Won't they? The mystery continues. The significance of a BlackRock XRP ETF cannot be overstated. It would represent a watershed moment, legitimizing XRP in the eyes of traditional finance. This, in turn, could trigger a domino effect, prompting other institutional players to follow suit. The implications for XRP's price and overall market adoption are enormous, making this a development worth watching closely. Adding to the intrigue is a mysterious event from BlackRock's past. A couple of years ago, a purported BlackRock XRP ETF filing surfaced, sending ripples through the crypto community. Excitement was short-lived, however, as the filing was quickly debunked as a hoax. The perpetrator remains unknown, and BlackRock has remained tight-lipped about the incident. This phantom filing raises more questions than answers. Was it a simple error, a deliberate act of market manipulation, or a strategic test by BlackRock to gauge market sentiment? The lack of a clear explanation has fueled speculation, further shrouding BlackRock's XRP intentions in mystery. To grasp the full weight of a potential BlackRock XRP ETF, it's crucial to understand the distinction between futures and spot ETFs. Both offer exposure to an asset's price movements without requiring direct ownership. However, the mechanics and implications differ significantly. A futures ETF, as the name suggests, tracks the price of futures contracts. These contracts represent agreements to buy or sell an asset at a predetermined price and date in the future. A spot ETF, on the other hand, directly holds the underlying asset. In this case, a spot XRP ETF would hold XRP itself, giving it a direct impact on XRP supply and demand dynamics. The world of XRP ETFs is not entirely barren. Futures-based XRP products, including the first XRP Futures ETF, have already made their debut. This mirrors the trajectory of Bitcoin ETFs, where futures-based products paved the way for their spot counterparts. These developments are significant as CME-listed futures provide regulated and reliable pricing data for XRP. The arrival of XRP Futures ETFs, while a positive step, is merely a prelude to the main act spot XRP ETFs. These are the holy grail for many investors as they promise a more direct and impactful exposure to XRP's price movements. The question on everyone's mind is, when will they arrive? Section 5 Regulatory Roadblocks Navigating the SEC Maze. The road to spot XRP ETFs has been paved with regulatory hurdles. The SEC, wary of market manipulation and investor protection, has adopted a cautious approach. Initial decisions on spot XRP ETFs have been pushed back to June 17, 2025, with a final deadline looming in October 2025. Adding to the uncertainty is the recent delay of Franklin Templeton's XRP ETF filing. Franklin Templeton, a $1.5 trillion asset manager, is a heavyweight in the financial world. This delay underscores the ongoing scrutiny faced by all spot XRP ETF hopefuls, regardless of their size or reputation. Despite the delays and regulatory uncertainty, there's a glimmer of hope in the air. The SEC's new leadership, including figures like Paul Atkins, is perceived as more open-minded towards cryptocurrencies. This, coupled with the successful launch of Bitcoin and Ethereum ETFs, has fueled optimism that spot XRP ETFs are not a matter of if, but when. Most experts predict a mid-summer to early fall 2025 launch for spot XRP ETFs, contingent on regulatory approvals. This timeframe coincides with the SEC's final deadline for pending applications. The anticipation is palpable, with the crypto community eagerly awaiting the green light. The potential impact of spot XRP ETFs on the XRP ecosystem is substantial. Analysts predict an influx of billions of dollars in institutional capital, potentially catapulting XRP's valuation to new heights. This surge in demand, coupled with the direct impact on circulating supply, could create a perfect storm for significant price appreciation. Beyond price movements, institutional adoption could have far-reaching consequences for the XRP ecosystem. It would legitimize XRP as a serious contender in the world of finance, attracting further investment and development. This in turn could lead to wider adoption of XRP for cross-border payments, its intended use case. While the world waits with bated breath for a BlackRock XRP ETF, Ripple, the company behind XRP, is not resting on its laurels. It continues to expand its blockchain footprint, making strategic acquisitions and forging new partnerships. The recent $1.25 billion acquisition of Hidden Road, a credit and liquidity platform, is a testament to Ripple's ambitious growth plans. Furthermore, the upcoming launch of RLUSD, a US-backed stablecoin built on the XRP ledger, could further boost XRP's utility. RLUSD aims to streamline cross-border payments, potentially positioning XRP as a key player in the rapidly evolving world of stablecoins. The future of XRP hangs in the balance, with the possibility of a BlackRock ETF and broader institutional adoption looming large. While regulatory hurdles and uncertainties remain, the overall sentiment is cautiously optimistic. The crypto landscape is evolving rapidly, and XRP, with its unique features and growing ecosystem, is well positioned to capitalize on the opportunities that lie ahead. The coming months will be crucial for XRP, potentially marking the dawn of a new era for this digital asset.
Paul Atkins, a strategic force beyond Bitcoin. Paul Atkins isn't just a Bitcoin supporter. He holds significant stakes in a wide array of cryptocurrency ventures. This confirms he's invested in the broader future of digital assets, not merely riding the Bitcoin wave. Where does BlackRock truly stand in the XRP ETF landscape? BlackRock's involvement in XRP is shaping up to be a strategic masterpiece cloaked in silence. Internal whispers suggest that XRP is poised to be the firm's next ETF launch. And these reports aren't coming from random speculation. They're sourced from individuals I trust with a consistent track record of accuracy. From my perspective, BlackRock appears to be playing a long game here. Their strategy seems designed to avoid triggering a premature surge in XRP's price before their ETF officially debuts. Rather than stoking public anticipation, BlackRock is moving in silence, likely waiting for clearer regulatory green lights before making their move. It's important to remember, BlackRock doesn't need months of preparation to file an ETF. If the past is any indication, like what we saw with Bitcoin ETFs, it's entirely possible they'll submit their application at the last possible moment to land within the first approval batch, while avoiding prolonged media scrutiny. Why sit in the application queue, attracting headlines and questions when the goal is discretion? It's possible that the earlier XRP ETF filing, later dismissed as fake, was BlackRock testing the waters. If so, the attention it stirred may have convinced them to stay quiet until the timing is perfect. Ripple connections run deep. But here's where it gets even more compelling. BlackRock's head of digital assets is a former Ripple executive, the very same person who created the XRP valuation model. These aren't outsiders, they're insiders, deeply familiar with XRP's mechanics and its long-term potential. Could BlackRock be intentionally delaying the filing to prevent mass inflows into XRP before they're ready? It's speculative, yes, but their calculated restraint hints at something deeper. There's clearly a relationship between Ripple and major US financial institutions. Combine that with BlackRock's known affinity for public blockchains, and you have a recipe for something massive. Frankly, it's hard to see them betting the future of financial infrastructure on Bitcoin or Ethereum. The XRP ties are far stronger and far more strategic. What happens when the gate opens? For years, retail and institutional investors faced barriers accessing XRP, especially in the United States. Regulatory ambiguity, delistings, and a lack of mainstream media coverage created an information vacuum filled only by independent voices like mine and others in the community. But the arrival of spot ETFs is set to shatter that isolation. According to JP Morgan analysts, the launch of XRP ETFs could trigger $8 to $10 billion in institutional inflows within the first year alone. That's an unprecedented level of capital injection into the XRP ecosystem, one that could radically shift both price action and public perception. The XRP community has carried this asset through legal battles, regulatory fog, and relentless FUD. Now, institutional players like BlackRock may be positioning themselves for a quiet but historic entry, just before the floodgates open. XRP's price explosion is inevitable. Here's why. Institutions are quietly positioning themselves. At this moment, the XRP multiplier effect is estimated to be between 500% and 600%. That means for every single dollar invested into XRP, its market cap impact is amplified 5 to 6 times. Now imagine what a $5 to $6 billion inflow would do. The outcome? Nothing short of astronomical. If major banking institutions genuinely intend to utilize the XRP ledger for real-world operations, they'll need to secure their XRP holdings before the floodgates open. No institution wants to chase XRP after its price has already exploded. That's why the real accumulation happens before the headlines. Currently, these financial giants can still acquire XRP directly from Ripple through OTC, over-the-counter transactions, without triggering major price fluctuations on public exchanges. But here's the catch. Ripple still sells it at the current market rate. So if XRP's value spikes post-ETF approval, even OTC purchases will cost more. That's why it makes perfect strategic sense for institutions to keep the price suppressed, acquire XRP discreetly, and quietly establish their positions before the average investor catches on. Yes, this is speculative, but it's not unfounded. It would be illogical for institutions preparing for long-term blockchain integration to not be aligning with XRP and Ripple. After all, Ripple is already partnered with dozens of major financial entities, and many are likely leveraging its custodial infrastructure today. Now, with Ripple's partnership with Hidden Road as its prime brokerage, the XRP ecosystem is becoming more institution-ready than ever before. We're entering a new era of finance, where digital asset utility determines longevity, and XRP sits at the intersection of traditional finance and decentralized infrastructure. So if these institutions truly plan to capitalize on XRP's rise, they're not going to wait until ETFs are live to start buying. That would spike the price and diminish their advantage. Instead, they'll accumulate quietly, then launch their ETF products, essentially pumping their own positions after the fact. It's not a conspiracy, it's standard Wall Street playbook, and all signs point to this very strategy being employed by BlackRock. Why else would one of their key digital asset executives be a former Ripple insider, the very person who created the XRP price valuation model? Why the delay in filing? The answer seems increasingly clear. They're front-running the price. Thanks for tuning in. If this insight helped bring clarity to the XRP ETF landscape, make sure to subscribe and stay informed. What's coming next could reshape the future of crypto forever.